Hello guys, welcome back to our channel. Today we're going to talk about what is share ownership.
And just before we start, we would like to clarify that we're not professionals, so please don't take this as professional advice. We're doing these videos for information purposes only. So as the video may appear a bit longer today, we're gonna split it into 5 sections. And if you'd like to jump to the time scale, you can see the description below.
So this 5 section gonna include first, what is share ownership, second, who is eligible for the scheme, third, how does it work, and fourth, how the cost involved of this scheme, and fifth, pros and cons. Okay, without further ado, let's dive into it.
So share ownership scheme is a government-backed scheme which allows first-time buyer or those who don't own currently a home to purchase a percentage of a newly built or resale property. So the scheme was introduced back in 2016 and it was known as Shared Ownership Affordable Home Program. Back in 2021, there were some new rules introduced which offer some upgrades and made the program better. But as there's going to be a transition period between 2021 and 2023 for these rules to take place, we're going to cover in these videos the old and the new rules of the scheme. So shared ownership scheme is also known as part buy, part rent scheme, where you're allowed to buy a percentage of the property, usually between 25 and 75% on the old rules, but on the new scheme rules, you can buy as little as 10% and start with that. On the remaining of the percentage, you are paying under market value rent. You're paying this rent to the housing association, and you pay to the housing association all the service charge involved with the property and the ground rent as well.
So what is the eligibility for this type of scheme? Actually, it's not suitable for everyone. Government make a few requirements of this type of scheme. So first of all, you have to be more than 18 years old, and second of all, your household income cannot be more than £80,000 if you purchase outside London, and if you purchase inside London, your household income cannot be more than 90,000. And third of all, you don't have other properties. If you own other property, it have to be on the process of selling it. And fourth of all, you have to have a great credit score, and different housing association actually have different criteria. So before you buy and purchase, you better double check with the housing association about these rules.
Okay, guys, so now let's look into how shared ownership scheme works. We're gonna look into an example to put everything into perspective. So let's say that you're buying a property which was 200,000 and you can afford, and you're going for 30% of the property. That's gonna cost you £60,000, which you need to go and obtain from independent mortgage lender. So the remaining of the property, the remaining 70% normally will be owned by the housing association. And then you're gonna have to pay a rent on that part. So the government provided the formula how the rent is calculated. So you're gonna pay not more than 3% of the remaining of the property which you don't own, which is equal to 140,000. So that's gonna be £4,200 per annum, which if we break per month, you're gonna own a rent of £350 per month or £81 per week. So the mortgage that you're gonna have to obtain for 60,000, of course, gonna require a deposit. So the minimum deposit on the scheme is 5%. However, some housing association gonna require a higher deposit, 10%, which is £6,000, 50%, £9,000. But have into consideration that the bank's gonna offer you a better interest rate if you put down a bigger deposit. So our advice is, if you have savings, just go for a higher deposit if you can.
So now you know all the how does this rent work in this type of scheme. Now let's talk about other fees and the cost. So first of all, you will have to prepare for a broker fee. Normally it's between 200 to £600. It depends different broker charge you different. So, but the range is around 200 to 600. Second is solicitor fee. So solicitor normally charge you between £2,000 to £4,000. Is again is it depends on different solicitor you use. And the third of all is the service charge of the building. So normally the service charge include the building maintenance and include ground rent and building insurance. And this normally costs between 100 to 300 pounds. It also depends the building association. Finally, let's talk about the stamp duty. Okay, now I'm gonna share my screen. So now we talk about the stamp duty of the share ownership flat. Actually, you have like two options in front of you if you use this type of scheme. First of all, you can pay the stamp duty in full. So you're gonna pay based on the price when you the house price when you purchase. So this advantage is like you don't need to worry about in the future. If the house price goes up, you need to pay more stamp duty. The disadvantage of this option is you normally need to prepare another couple of £1,000 then it's just going to increase your initial cost when you purchase share ownership flat. So second option is to pay it in stage, to pay a stamp duty when you reach 80% of the share of the property. Normally you're gonna pay more because in the future when the house price goes up, you also need to pay higher stamp duty. The advantage is obviously you don't have to pay at the beginning, so it's going to save you initial cost, so you don't need to worry about at the beginning. And here we prepared two tables about stamp duty when you are first-time buyer or you're not first-time buyer. So now let's have a look when you are first-time buyer. So if you are first-time buyer, so if the property price you purchase is between is under £300,000, you don't pay any stamp duty. And if you purchase between if your house price, your purchase house price between more than 300,000 but less than 925,000, you pay 5% of the stamp duty. So for example, if you purchase house price just under 500,000, so you just pay the 5% on the amount of the purchase price in excess of 300,000. But you need to I need to point out one thing. If your house price more than 500,000, you are not be entitled of any relief and will pay the stamp duty at normal rate. Here is the table for if you are not a first-time buyer. So between 0 to 125,000, you don't need to pay any stamp duty, and if you between 100 more than 125,000 but less than 250,000, you pay 2%. So here I'm not going to read everything, and then if you want, you can pause the video and read through it.
Okay guys, so let's talk about the pros of the shared ownership scheme now. So the first and most important pro is that actually gives very easy access for first-time buyers to the property ladder, as well to buyers on the lower scale of income. And that is why the scheme actually makes the mortgage really accessible, because you're gonna have to obtain mortgage only on the percentage of the share that you're buying initially. So that's gonna make your initial deposit on the mortgage really small as well, as small as 5% in the ideal cases. Another thing is that the actual mortgage monthly installments is gonna be also small. The rent that you're going to pay on the rest of the percentage of the property that you don't own is going to be cheaper comparing to if you go to rent on the open market. As well, you can staircase. The option to staircase, it's the process of buying more shares on the property. So on the old scheme rules, you could have staircase at least 10%. That was the minimum, 10% each time you want to staircase. But on the new property on the
New
new
rules.
rules, you can actually staircase as little as 1% per year. But they have this option where you can increase your percentage of ownership 1% each year for the first 15 years. Another pro is that actually at any time you can decide and share and sell your share, which is going to probably make you some money, because as the time passing and the value of the property increases, the value of your share also going to increase. And the last pro we would like to share is that you might not have to pay any stamp duty tax at all if you decide not to pay from the beginning and later on never get to increase your share up to 80%. You might just end up selling your share and not paying any stamp duty.
So let's talk about the downsides of this scheme. So first of all, not all the lender are gonna lend you money for this type of share ownership scheme. So you have limited lender, which means it's not very good, isn't it? So most of the time you are required to minimum 5%, but many cases you probably need to prepare for 10%, 15%. Mortgage broker always probably gonna ask you for a higher deposit, so you can get a better interest rate, or you can approach more mortgage lenders. And second of all is no matter how much percentage you own, you always have to pay 100% service charge. And the housing association will not share the cost, cover the cost, so all the costs by you. And then third of all, most of the property which sold by this type of scheme is only leasehold only, so it's not like other property in UK. Most of the time if you buy a house, you're gonna have freehold. Another thing is about the permission. So although you are the homeowner, but you still need permission for certain things. For example, if you want to improve your home, if you want to restructure your home, and also there are some certain rules and restrictions of some housing association may have. For example, some housing association don't allow people who have a pet in their share ownership home. For example, some of the housing associations, they don't allow people to dry their clothes in the balcony.
Their own balcony. Yeah.
And the fifth is the old scheme. Normally, you have to, for example, the old scheme, you normally have to cover 100% of the home repairment. Let's say the boiler break, you have to cover it. Let's say you need to require some plumber or require some electricians, you always need to cover 100% of the cost. The housing association will not take any responsibility, although probably they own the 75%, but you have to take care of everything. However, the good news is the new scheme now they introduced like a 10 years of warranty. So the first 10 years you are covered. You don't need to worry about. And sixth is you can't rent it out, you can't sublet. For example, if you change your mind, now you find a partner, you want to move in, you can't rent it out to others, you have to keep paying. For example, if you want to travel somewhere or you relocate it somewhere, you probably want to rent it out, but if with this type of scheme, you can't do anything, you have to just keep paying. Seventh is a staircasing costs involve a lot. For example, every time you want to staircase, it's normally involve a lot of expenses. Maybe you're not prepared. For example, every time you need to pay the broker fee, solicitor fee, housing association normally also charge you, and valuation fee from the lender, from the bank. So there are probably a couple of thousands cost you need to involve, and you need to prepare just before you think you're ready for the staircasing. And then yeah, that's it. So we hope you like the video, and we hope this video helps you. If you like it, please subscribe us, and please click the like button, and it's really gonna help us a lot. And then we're gonna have more videos coming if we know that you guys like this type of video.
Yeah, thank you guys. Also, let us know if you have any questions. What is your opinion on the scheme? And yeah, give a suggestion for new topics as well.
Yeah.
More is coming from us. Bye.
Bye.